Hello everyone, I am S Vishal. Today I will be explaining about ITR 1 and 4 and its reporting. So I will be talking about ITR 1 and its reporting and ITR 4 and its reporting. First of all, who can file ITR 1? ITR 1 can be filed by any individual whose total income does not exceed 50 lakhs and he has income from salary, one house property, family pension and income from other sources and agricultural income up to rupees 5,000. So next, who cannot file the ITR 1? So ITR 1 cannot be used by a person who is a director in a company or has held any unlisted equity shares during the previous year or has any asset located outside India or has signing authority in account located outside India or has any income from sources outside India or is a person in whose case tax has been deducted under section 194N and is a non-resident or not ordinarily resident, has any brought forward loss or to be carried forward under any head of the income or the total income exceeds rupees 50 lakhs. So I will take you briefly through the ITR 1 form. So ITR form is divided into several parts. The part A contains general information like your name, Aadhaar number, PAN card, address, etc. And part B contains your income from salary or income from house property or income from other sources and the details you have to put there. And part C contains deductions if you are opting under old regime, ATC, ATC, CD, ATD and other deductions. And part D contains computation of your tax payable based on the income you reported and the deductions which you have claimed. So next up is ITR 4 and its reporting. So who can file ITR 4? ITR 4 can be filed by any businessman who is opting for presumptive method of taxation under section 44 AD, ADA or AE of the Income Tax Act. So when you are having business or profession, you have to maintain books and calculate profit as per the Income Tax Act and rules. So it's very difficult to comply with the same for small business and professionals. So the option has been given to the taxpayers to opt for 44 AD, 44 ADA and AE. So what is presumptive taxation method? When you are having business or profession, you have to maintain books of accounts and calculate profit as per the Income Tax Act and rules. So it's very difficult for small businessmen to comply with the same. So an option has been given for the taxpayers to opt for presumptive taxation method and declare a certain percentage of amount as profits and their income. So next up is who are not eligible to file the ITR 4. ITR 4 cannot be filed by a person who is a director in a company or has held any unlisted equity shares at any time during the previous year or has any asset located outside India or has signing authority in any account outside India or has any income from sources outside India or has any brought forward losses or loss to be carried forward under any head of income or his total income exceeds rupees 50 lakhs. So this is the ITR 4 applicable for this assessment year. Similar to ITR 1, it has been divided into several parts. Part A contains general information like your name, PAN, Aadhaar, address, etc. And in part B, you have to report your salary income, house property income, income from other sources and income from business. And part C contains deduction details and part D contains your computation of tax. So when you have opted for presumptive method under section 44 AD, ADA and AE, you have to declare a certain percentage of profit as your income. So when you have running business, you have to, and your turnover is up to rupees 2 crores, you can declare whether 6% or 8% depending on your cash payment and cash receipt. If your cash payment and cash receipts are less than 5% of total receipts and total payments, you can declare 6% as your profit. Coming to section 44 ADA, if you are a professional and you can opt to declare your income as 50% of your total income, and again if your cash receipt and cash payments are less than 5%, the limit will be extended to 75 lakh rupees. Next, under 44 AE, if you are in the business of goods carriage, then the tax will be calculated as 1000 per ton per month in case of tonnage up to exceeds 12 metric tons and or 7,500 per month, whichever is higher. So this was all about ITR 1 and 4 and its reporting. Thank you.